Hi all, this is Ashish Kyal here, and welcome again to Elliott Wave News Channel by wavesstrategy.com. In today's session, we are going to discuss about Nifty, where is it currently placed. And if you remember in the last week's update as well, I said that Nifty is probably heading for a reversal. We are going to discuss about why is it important to look at Nifty today at after a very important close. So Nifty has closed at a very important level in today's session, and I'm going to just now explain about the various reasons why this specific level is important. But firstly, let me talk about what is happening with the psychology and the thought process of the majority of the people. So the majority had been bullish, expecting Nifty to easily cross 9,700 levels and probably head towards 9,800 or much higher levels from there. And this is was also expected because after 8 or 9 days of sideways to downside correction that Nifty showed from around 9,710 towards 9,560 odd levels, that correction took around 9 days, and then it gave a positive breakout. But this time it was very different. Most of the occasions from 7,900, whenever there was a positive breakout, we saw very strong momentum on the first 2 days itself, and price rallied for the third day as well. This time the rally happened only for the first day. On the second day there was some sideways action and correction on the downside. The third day rally happened, and now on the fourth day we are again seeing a very serious sell-off, which retraced back the entire move, almost the entire move in faster time. And 9560 is the level from where the up move started about 3 days back, and now that specific move is almost retraced entirely in faster time, and that is why that level becomes extremely important. And we have just flirted around that zone. In fact, we have also broken the trend line support, which was containing the entire price action of over past few months. So that trend line support is also broken now. The time cycle is also on the sell mode. If you remember time cycles, we discussed a few weeks back, and that time cycle continues to be in the sell mode in the later part of the stages, and that's why the pressure has been building on Nifty and the broader markets as well. So let me now share across the chart on the website wavestrategy.com. If you go, you can see the chart screen. So let me share across. So this is the website wavestrategy.com. Over here, if you go to the charts, you can see a pre-plotted Nifty chart by default. And let me just open up. Okay, so here is the Nifty chart that you can see, and this movement on the Nifty has been happening on the back of very strong negative divergence. So over here, if you scroll down, you can even zoom out. So once you zoom out and see this chart, you will be able to realize that the up move on the Nifty has been on the back of negative divergences that you are seeing on the RSI. So the first thing I observe is, looking at RSI, there has been a series of negative divergence, and that's why it is prudent not to be carried away by simply looking at the price pattern, but also looking at divergence. And we have been advising our clients in the daily research report not to leverage too much if you are on the long side, because momentum is not going to build up in the up move, and that is what we are witnessing right now. So this is the divergence you are seeing, very clearly seeing Nifty has been drifting higher, but there is no momentum which is building up. Next is in today's session, you can clearly see, this is not updated, I think. In the today's session, you can clearly see prices have failed to show the momentum on the upside. So this was as per yesterday. In yesterday's session itself, Nifty has moved down and closed towards the level of 9630. And after that, today, it just touched around this zone. So this was the level of 9560. Why 9560 is important? Because this 8 to 9 days of down move was then taken out on the upside. Nifty came back towards the level of which was seen previously, which is near 9700. However, even when Nifty came here, there is still a strong negative divergence that you can see on the lower degree chart. So if you look at this divergence, there is a strong negative divergence on a daily scale between 2 points, as well as there is a strong negative divergence on the medium term scale, again, which has been ongoing for many weeks now. This clearly suggests the momentum is not building up in the market. Next is, in today's session, Nifty has actually retraced practically this up move, which took somewhere around 1, 2, 3, and 4 days to go on. it was retraced completely in just a single day of time. So that kind of movement suggests that there is some nervousness which has crept in. And for the first time, if Nifty now breaks below this level, for the first time we are going to see a lower high and a lower low formation very clearly, because this high is 9700, this high was 9709 point something, and we are going to see for the first time a lower high lower low formation on a daily scale. So this is not sending across a very prominent signal. So that's going to be a nervous sign which is going to be seen on the market. It's very important you keep an eye on these levels. Now also, if I show you my research report which was published today morning, that will give you much more insight into the time cycles, why we think this is an important level and why we think Nifty is at a very important juncture as of now. So let me share across the another report page. So you can see here, this is a financial wave short-term update which we publish every day morning before the market opens. In this research, you can very clearly see that the internal counts of the ongoing move. But apart from the counts, what I want to observe is the time cycle. So if you look at the time cycles, prices have been forming lows around this time cycle. So we have been seeing some kind of a sideways action or a downside move when the time cycle approaches. Same thing was happened before. So you can see the sideways action. Instead of downside correction, there was sideways action which was in. This was around 2 days late. So you can see this demonetization, again a cycle low. And now we are approaching towards that cycle low, which is going to be sometime in the start of in the mid week of July. I'll be mentioning the exact date in the daily research report. Now, if that is the case, which means that the cycles have topped out. If the cycle has topped out, which means at least for next few days or week, we are going to see some kind of a pressure on the prices. Now, today's movement has resulted into breaking below the channel, the lower end of the channel, which is this one. So the channel has been broken on the downside. Now that is not a very positive sign. Next is this entire up move has been retraced back practically in the faster time. Now that is not very positive sign. And this has been happening on the back of a strong negative divergence with a very clear implication from time cycle, which is a 55-day cycle, that prices are in the later stages of the down move. Now, when so many indicators are getting synchronized together, it is the time to stay alert. This is not the time to be complacent and probably buying on dips. I am again repeating, this looks like to be the time when one has to stay alert. One need to keep ensuring that what is the technical stage of the market is right now. And if you probably want to capture the next big trend, I think it is this time, because it's not very often we get so many synchronizations together. Look at the early chart. You can find the early charts in our daily research report, financial wave short-term update. The important levels will be mentioned there with the intraday counts on the Nifty. So all those things are now very important. It's not very often we see time cycles indicators like RSI showing divergence, wave counts showing completion, and and at the same time the weekly close is going to be negative. So many indicators and so many patterns are now synchronized together. And this is the time exactly when majority are complacent, expecting markets to again keep rallying up, but it is not doing so. So it looks like a classical distribution. Break below the important support level, which will be again mentioned in the report, will confirm that the down move has started, and it's not going to be a short-term down move this time. It's going to be an important down move, which I am expecting at least for next 1 to 2 weeks. So stay tuned, stay alert, and I thought this is going to be very important for everyone to know. And I have given the technical explanation why I see that prices are probably at a very important juncture. So as long as this scenario will remain valid, as long as 9710 remains intact, crossing 9710 in this expiry looks highly unlikely for now. And as long as that level is not crossed, this scenario will remain valid. If a lower probable scenario plays out, so this is all about probability. The higher probability scenario I have discussed. If the lower probable scenario plays out, we will know for sure. But the risk right now is favoring, the odds right now are favoring that there can be a possible serious capitulation we might start seeing on the broader markets and Nifty as well. So stay tuned, keep reading the daily research report, which will give an tremendous insight into the short-term counts, along with the breadth, which has been deteriorating all the while. It has been a crazy deterioration in breadth. This scenario looks very similar to what happened in 2015 top, I think the same is repeating again, and that's why I am come out very strongly and boldly. This time it is going to be similar to 2015 top, when majority were bullish, but the market started a 9 months of down move. So stay tuned, keep reading the research, and in case there is one information, if in case you would like to register for a training, upcoming training I will be conducting and speaking on 29th-30th July in Mumbai at Grand Sarovar Hotel on most advanced technical analysis training using Elliott wave, Neo wave, time cycles, and to some extent again time cycle as well. So those things when combined together gives a lethal combination of knowing where the markets are headed with a very strong conviction. So in case you would like to enroll for that, you please visit wavestrategy.com or contact us on 99204 22202, and my team will be more than happy to assist you. I'll be speaking there personally, so hoping to see you there, and see you again next week Friday, same time, 4 o'clock. The re-telecast will be available at 5 p.m. on our website for today's session. Thank you. Have a blissful weekend.